What's up, people? Welcome or welcome back to Invest with T-Claus. My name is Tevi, and this channel is dedicated to my investment journey, along with coverage on crypto, Tesla, Neo, Virgin Galactic, and ChargePoint. Come for the information and stay for the perspective. So today is all about Tesla, and if you follow me on Twitter, you already know that this was a record quarter and a record year for Tesla. There were a few golden nuggets revealed during the call by Elon and the team, but before we dive into today's topic, I want to recognize the fact that the channel has hit another milestone, and that's by passing 200 subscribers. As a token of my appreciation, I had a giveaway announced on Twitter earlier this week, and the winner will receive their prize later today. So thank you all for the continued support in helping the channel grow. The next milestone to be celebrated will be at the 500 subscriber mark, and at that point we'll likely do a combination of an NFT giveaway as well as a crypto prize. More details as we get closer, but being subscribed to the channel and following on Twitter will ensure that you don't miss out on future related announcements. Once again, thank you all. Okay, so getting back to the main topic, I'll go over some of the main highlights from the call. I'll share some interview clips that provide additional insight into Tesla's current and future outlook, and of course, share my thoughts along the way and what I'm personally doing in light of all this. As always, I'd recommend watching all the way through so you don't miss out on any pertinent information I'll be sharing. Drop the video an early like if you haven't already, and hit that subscribe button. Those are two easy ways to show your support to the channel and help it grow if you appreciate the content. All right, let's get into it. I think by now most of you know and realize that I am a huge Tesla bull, and as far as I'm concerned, they have won the decade. Yes, competition is coming, but the market is also expanding tremendously. And so even if Tesla's percentage market share will inherently drop over time, the associated value of that percentage will continue to grow significantly. Put simply, here's another way to think about it. What is bigger, 80% of $10,000 or 40% of $1 million? I think you get my point here and the perspective that you need to have when thinking about Tesla. Take a quick listen to this clip as it summarizes quite well the level of outperformance Tesla delivered in Q4 and last year overall.
Reported were extraordinary. The deliveries, what's expected next year, but the stock, as I pointed out, has lost about 21% of its value so far this year. Does that make sense to you?
Well, look, I think the whole market has been a bit overvalued. But if you look at Tesla, you have to see three things. First, blockbuster quarter. They grew revenues from $32 billion in 2020 to $53.8 billion in 2021. That's 58% growth. Nobody else in the global auto industry is doing anything close, and with a $5.5 billion profit. That's looking pretty good. Second part of the equation is how are they doing relative to competition? They produced 930,000 vehicles in 2021, more than anybody thought, 2x over their closest competitor, Volkswagen, 453,000. Just by comparison, Ford and GM produced only 27 and 25,000 vehicles respectively. So to me, rapid growth, profitability, outpacing competition, hard to ask for a lot more than that.
Those are some massive numbers, and to further drive this point home, Tesla shared this during the earnings call, and I quote, "2021 was a breakthrough year for Tesla. There should no longer be doubts about the viability and profitability of electric vehicles. With our deliveries up 87% in 2021, we achieved the highest quarterly operating margin amongst all volume OEMs based on the latest available data, demonstrating that EVs can be more profitable than combustion engine vehicles." End of quote. That is a profound statement. The very first video I posted on this channel was about how Tesla was leading the transition to EVs, and this was well over a year ago. It's also important to note the shift in the narrative around Tesla between 2020 and now, in case you haven't noticed. Realize that it's no longer about can Tesla be profitable or Tesla needs EV credits to be profitable, but rather how much more profitable can they be based on the technology they are bringing to market, as well as who can possibly catch up to them. This next clip here does a good job at highlighting where we are in the competitive landscape. Take a listen.
Yeah, that does put it in perspective in terms of the actual manufacturing numbers. But that said, when somebody goes to make a decision this year to buy a new EV vehicle and or next year, there are going to be more choices available to them. And that does seem to at least be some concern for investors who otherwise perhaps might own the stock.
Look, there is a ton of competition. Every automaker in the world is going electric, so get used to that. And by the way, the cost of electric vehicles will go down commensurate with the dropping cost of lithium-ion batteries. So yes, Tesla's going to get more competition, but just know the whole marketplace is going electric. That's what consumers want. By the way, Tesla, a 10-month waiting line for their Model Ys alone. So the demand is huge. They're number one. The question is anybody catching up? General Motors, a lot of talk about Mary Barra's $7 billion commitment to building new factories, but It should have started that 5 years ago. The real competition, I think, is Volkswagen, global brand, deep pockets, manufacturing facilities in Europe and the United States, and they've taken battery production somewhat in-house in the partnership with Northvolt. You also need to look at the Chinese, and most Americans will say Chinese car makers, but they're coming, and you'll see new brand names competing on the market like XPeng, NIO, and SAIC. China is the biggest auto market in the world, and they have the advantage that the government subsidizes their vehicles. So get ready, new waves of competitors are coming, but for now, Tesla's still king of the hill.
Obviously, I agree with him. Now, that said, my second largest EV holding is NIO. They have the scale, technology, and are differentiated enough that I believe they will more than likely occupy that second place on the global stage over time. If you want to hear a bit more about NIO, you can watch my coverage of NIO Day here. Now, the first major surprise that was announced on the call was the fact that the Cybertruck and the Roadster were now officially pushed back to 2023. The $25,000 car isn't actively being worked on, but rather the focus will be on ramping up the two new factories, accelerating development of the Tesla bot, and getting FSD to a wider release beyond beta, which surprised a lot of people. The factory ramps make complete sense given that the demand that Tesla has far outstrips its current supply. However, the focus on FSD may not be as obvious to some, and this next clip here provides some good perspective. Take a listen.
Let's talk about full service driving first. It is something that's come under fire from a lot of quarters, but they have, I think, 600,000 beta subscribers who have signed up for this and are testing it out right now. What are the pros and the cons when it comes down to it?
I think, the full self-driving focus was a bit of a surprise. It was announced that Elon was going to be on the call to talk about future product and product roadmap. And I think people, myself included, were expecting an update on new model releases. Instead, what he talked about was full self-driving and how that's going to change Tesla's economics. And this isn't well known, but rideshare companies calculate that a fully autonomous robotaxi may be worth $250,000 a year. And that, I think, is what Elon was pointing to. If Tesla can extract that kind of value, that completely changes the economics of the car business. And it won't be just Tesla. It's any manufacturer that can produce a self-driving vehicle at scale. But as you mentioned, this is a very, very difficult technology to bring to market. It feels like we've been a year away for about 10 years from realizing the benefits of full self-driving. Yeah.
That is a huge opportunity. Quick back of the napkin math tells you that with the current annual run rate of 1 million cars and a potential ROI of $250K per car, that's $250 billion a year that Tesla could unlock in the next couple of years here. We found out also during the earnings call that the FSD program was extended from 1,000 cars to nearly 60,000 during the last quarter. By now, you probably also have heard of the Hertz news and a massive order they placed with Tesla. The main reason why ride-sharing companies are increasingly lining up and adding Teslas to their fleet is because of the value proposition that is just around the corner. And so where does that leave us from an outlook perspective with 2022 kicking off? Well, Tesla currently has an installed capacity of over 1 million vehicles between the Fremont factory and Giga Shanghai. We also found out during the earnings call that they are already building Model Ys with the structural battery pack and the 4680 cells out of the Austin factory, which was a huge surprise. The formal factory opening is expected by spring, an actual date will follow. Giga Berlin is lagging behind because of the German red tape, and that's likely now going to be a summer opening. That said, it's important to know that they're also building cars out of that factory, and they're simply waiting for the final approval at this point. The focus on the Tesla bot is way underappreciated in my opinion, even though Elon keeps stressing how important it is. And so if you're interested in hearing how I think the Tesla bot fits into the overall picture, you can watch this video here. I will say though that the fact that Elon is making this a top priority for Tesla only goes to support my theory. Last but certainly not least, understand the position of strength that Tesla currently is in. They have a 5-year lead on the competition, debt is at an all-time low at $1.4 billion, and their available cash and cash equivalents are an all-time high at $17.6 billion. The current macro backdrop has provided investors with a golden opportunity to lock in their gain by selling high, leading to the current price decline. But more importantly, those with a long-term view can now add or start a position at a lower entry point, nearly a 20% discount since the year started. Now realize that this is not meant to be financial advice, as I'm not a financial advisor, and I know that most of you who have been following realize this, but my personal approach here will be to pivot back into Tesla and adding to my position while we're still at these lower levels. Now, I'm almost done buying all of my Virgin Galactic and almost done buying all of my ChargePoint, and once that's done, then Tesla is next. And on that note, I'll leave it here for today. Don't forget to drop the video a like if you enjoyed the content and share with others who you think could benefit from it. For my newcomers, subscribe and don't forget to ring the notification bell so that you don't miss out on any future videos just like this. As a reminder, I post every Sunday and now I target one in-week video for more crypto-focused content. Thank you for watching, stay humble, hustle hard, and I'll see you in the next one.